Imagine a young man with wild hair, a disarming smile, and the audacity to redefine the financial world. Sam Bankman-Fried was hailed as the new prodigy of Wall Street, a crypto king who promised to revolutionize how money moved across borders. He wasn't just building a business, he was building a movement, and the world believed he was one of the good guys. At just 29, Sam had amassed billions and launched FTX, a crypto exchange that skyrocketed in popularity almost overnight. But behind the scenes, a tangled web of ambition, ideology, and unchecked power was quietly spinning out of control. The story of Sam Bankman-Fried is not just about crypto, it's about the seductive power of vision, the dangers of hubris, and how even the most celebrated disruptors can become architects of disaster. Sam grew up in a family of academics, absorbing ideas about ethics and mathematics at the dinner table. He later attended MIT, where he was drawn into the world of effective altruism, the belief that wealth should be used to do the most good possible. Sam's early career began at Jane Street, a trading firm known for meritocracy and cutthroat efficiency. There, he learned how to spot arbitrage opportunities and move capital fast, lessons that would serve him well in the world of crypto. By 2017, he saw the chaos and inefficiency in crypto markets as a once-in-a-generation opening. Sam founded Alameda Research, a trading firm that exploited price differences across exchanges, quickly raking in millions. But Sam wasn't satisfied with just making money, he wanted to change the system. FTX was born in 2019. Unlike other crypto exchanges, FTX offered sophisticated derivatives, futures, and leveraged products. It was built by traders, for traders, with a focus on transparency and speed. Sam's pitch was irresistible, a platform for serious investors, backed by a CEO dedicated to philanthropy and innovation. Within 2 years, FTX became one of the fastest-growing exchanges globally, with valuations soaring above $32 billion. Celebrities and athletes lined up as brand ambassadors. Legislators and regulators took his calls. Sam became a regular face in Washington, testifying about the future of finance and advocating for sensible crypto regulation. He poured millions into political campaigns, especially those promising to support crypto-friendly policies. Some saw him as the next Rockefeller, a capitalist with a conscience, poised to use his fortune for the greater good. But in the shadows, FTX and Alameda Research shared more than just a visionary founder. The companies operated in a way that blurred ethical lines. Alameda, Sam's trading firm, was secretly using customer funds from FTX to cover its own risky bets. These weren't just accounting errors, this was a calculated risk, hidden from investors, partners, and even employees. Sam's effective altruism narrative made it easy for people to overlook warning signs. After all, he wasn't living lavishly. He famously slept on beanbags and wore shorts to meetings. He donated millions to pandemic prevention, animal welfare, and climate causes. But as FTX grew, so did its liabilities. The company was over-leveraged, with billions in customer assets unaccounted for. In late 2022, a bombshell report revealed the deep entanglement between FTX and Alameda. The market panicked, withdrawals surged, and in a matter of days, FTX, the golden child of crypto, collapsed into bankruptcy. Investors lost billions, employees were blindsided. Regulators and prosecutors swooped in, launching one of the most high-profile financial investigations of the decade. The fall of FTX sent shockwaves through the entire crypto ecosystem. Rival exchanges scrambled to reassure customers. Prices of major cryptocurrencies plummeted. The credibility of the industry suffered a historic blow, and questions lingered about how such a collapse could happen so quickly. Sam's political connections came under scrutiny. He had donated tens of millions to both major parties, attending private dinners with lawmakers, and shaping policy behind closed doors. Was this influence peddling, or just savvy capitalism? Some argued that Sam's downfall was a classic tale of overreach, the kind of risk-taking that drives innovation but can also lead to spectacular failure. Others saw it as a cautionary tale about the dangers of unchecked ambition, even in the hands of those with noble intentions. But there's a deeper nuance here. Sam's story isn't just about greed or fraud. It's about the power of narrative in shaping markets, the intoxicating appeal of disruption, and the fragile line between visionary risk and reckless behavior. Many of the world's greatest entrepreneurs, think Rockefeller, Carnegie, or even Elon Musk, have walked this line, balancing ambition with accountability. In Sam's case, the balance tipped. Yet, the FTX saga also reveals the resilience of free markets. When bad actors are exposed, markets adapt and evolve. New regulations emerge, investors become more discerning, and the system ultimately gets stronger. That's the beauty of capitalism. It rewards innovation, but it also punishes excess. In the aftermath, Sam Bankman-Fried became a symbol of both crypto's promise and its perils. Some still see him as a misunderstood genius, undone by circumstances beyond his control. Others view him as a cautionary example, a reminder that good intentions are no substitute for transparency and sound governance. But whatever your perspective, you can't deny the impact of his rise and fall. The FTX crash forced the industry to confront uncomfortable truths about risk, accountability, and the importance of robust institutions. It also reignited debates about the role of entrepreneurs in shaping public policy. Should visionaries like Sam be celebrated for their ambition or held to higher standards because of their influence? The answer might be both. Capitalism thrives on bold ideas, but it also relies on accountability and trust. Sam's story reminds us that the pursuit of profit and purpose is a delicate dance, one that can change the world or bring it to its knees. If you've made it this far, take a moment to like this video, subscribe for more eye-opening stories, and share your thoughts in the comments. What topic would you like to see next on Fortune Route? Now back to the story. Even in failure, Sam Bankman-Fried's journey offers lessons for entrepreneurs, investors, and policymakers. The importance of transparency, the value of skepticism, and the risks that come from putting too much faith in any one leader. As the dust settles, the crypto world is already rebuilding. New leaders are emerging, learning from the mistakes of FTX and pushing for more robust systems. That's the relentless engine of innovation, always moving forward, always adapting. In the end, Sam's legacy may be defined not just by what he built or destroyed, but by how the industry responds and grows from the wreckage. That's the spirit of free enterprise, a force for progress, even when it's messy. Let this story be a reminder: trust but verify, celebrate the dreamers but demand transparency, and never underestimate the power of ideas to change the world for better or worse. Thanks for watching Fortune Route. Don't forget to like, subscribe, and share this video if you found it insightful. Comment below what stories you want us to uncover next, and hit the bell icon so you never miss a journey into the world of high-stakes business and bold ambition.